Welcome. I'm sharing my personal financial journey. I started investing at age 30, and today I'm revealing exactly what happened to my wealth after 5 years. If you're hovering around 30, maybe feeling like you've missed the boat, this video is for you. We'll break down the reality of starting later, the hidden advantages, and the simple steps I took. If you're in your 30s and haven't started investing yet, trust me, you are not alone. But this video is designed to give you the clarity and motivation to change that right now. So the question everyone asks, what actually happened to my net worth? Did I make a fortune? Did I struggle? The journey was surprising, and the results speak for themselves. I hit 30 and realized I was financially stagnant. I wasn't in debt, but I wasn't building wealth either. I had to shake off the embarrassment and commit. Better late than never became my mantra. Let's talk about the hard truth, the cost of waiting. This is why you feel that sense of panic. It's not just lost time, it's lost compounding growth. What does one wasted decade, specifically your 20s, cost you in real dollars? The difference is staggering, and it's due entirely to the magic of compound interest working over those early years. Imagine starting with $500 a month at age 22 versus age 32. Over 30 years, that 10-year head start can mean hundreds of thousands of dollars difference in your retirement nest egg, simply because time is your biggest asset. Now, don't let those numbers paralyze you. The goal here is to create urgency, not hopelessness. You still have decades of investing ahead. Every day you wait now is a day your money isn't working for you. But here is the exciting part. Your 30s actually come with some serious advantages that those 20-somethings don't have. In your 30s, you are likely earning a higher income than your 20s. This means you can throw more money at your investments from the start, partially offsetting the time you lost. You also have more life clarity. You know where your money is going, what financial goals matter, and you can make better, more disciplined investment decisions without the financial turbulence of early adulthood. Think of the urgency as motivation, not punishment. You've seen the consequences of waiting, and now you have the power to act decisively. The 30s investor isn't just slower, they are different. They are more focused, more capable of delayed gratification, and often more stable, qualities that lead to powerful, consistent investing. Ready to start? Here are the 3 non-negotiable decisions I made in my first 30 days that completely changed the trajectory of my wealth. First, know your real number. Get ruthlessly honest about your debt, your emergency savings fund size, and your income to expense gap. This data is your roadmap. Second, pick one investment vehicle, like a low-cost index fund or fully funding your 401k match, and automate the contribution. Set it and forget it. Consistency is key. Third, aggressively cut one major expense. Find $300 to $500 a month and redirect that money directly into your new automated investment. This creates immediate forward momentum. Now for the fun part, the real journey. Let's look at what actually happened year by year in my investment portfolio. Year 1 was all about getting my financial foundation rock solid, eliminating high-interest debt and making those first, small, consistent investments. Years 2 and 3 are where the magic starts to happen. You start seeing the compound interest kick in, turning your consistent contributions into true momentum. It's incredibly motivating. By years 4 and 5, the gap between you now and the person you were at year 0 feet is undeniable. Showing those projected numbers, like $500 a month compounding at 7%, becomes a powerful visualization of your hard work. Now let's address the biggest mental hurdle, the comparison trap. It's easy to feel inadequate when you see others posting their early wins. Stop comparing your beginning to someone else's middle. Your only benchmark should be the version of you from last year. That shift in mindset is the 30s wealth builder's unique advantage. It's vital to visualize the long game. Let's look at a conservative projection for what your portfolio could look like at age 40 and 45. If you start at 30 investing $500 to $1,000 a month, compare that trajectory to someone who waits until 40. The visual gap between those two paths is the powerful emotional payoff of why you need to start today. Let's reset and review where I began. Understanding the starting point makes the 5-year result even more impactful. My initial financial situation involved 0 high-interest debt, a minimal savings rate, and a conservative mindset driven by fear of loss rather than excitement for gain. My initial investment capital was low, and my mindset was definitely conservative. I focused on safety and stability, which meant slow but steady growth. My strategy evolved over the first 3 years, transitioning from overly cautious to confidently consistent. My core strategy centered on low-cost index funds, primarily S&P 500 trackers, with a small allocation to individual stocks for fun, and maximizing my 401k match. I had small early wins that built confidence, but I also learned quickly that trying to time the market was a fool's errand. The biggest lesson was, stay invested, no matter what. As I moved into years 3 through 5, I began to make key mid-journey adjustments to accelerate growth. I experienced market fluctuations firsthand. This required portfolio rebalancing to maintain my target risk levels, ensuring I was still diversified and resilient against downturns. Crucially, as my income grew, I increased my monthly contributions. This, combined with the accelerating compounding effect, really supercharged my overall returns. After 5 years of dedicated investing starting at age 30, here is the moment of truth, the tangible result of my effort and discipline. The final investment value exceeded my initial projections, resulting in significant percentage gains, proving that consistent contributions and compound interest truly work. The impact on my financial outlook has been transformational. I now feel secure, confident, and excited about achieving true financial independence. If you remember nothing else from this video, focus on these final key takeaways that summarize my journey. The biggest lesson learned is that consistency beats perfect timing. The simple act of starting, even small, far outweighs the anxiety of not having started in your 20s. For anyone starting their journey in their 30s, prioritize debt elimination, automate your investments, and stop comparing yourself to others. Just get started today. They say the best time to start investing was 10 years ago. But the second best time, and the time that truly matters, is right now, today. Subscribe, comment your current age and financial goal below, and don't miss my next video where I cover the 3 essential investment accounts every person in their 30s needs.